And switching gears, employee wages were on the rise in November to counteract the shortage in worker supply. But our next guest says that one thing is missing from the labor market. That's productivity. ADP Chief Economist Nela Richardson joins us now. Are we not as productive as we should be, Nela? I mean, I think we're doing pretty good, but perhaps there's something else at play more broadly in this employment situation.
So my next comments have nothing to do with your personal productivity.
Thank you so
I'm
much.
sure you are more productive.
I'm going to put that in my yearly review.
But as a country, we are actually less productive this year than we were last year. Americans are working more and producing less. And that is the fly in the ointment of the labor market, right? The way that wages go up for good reasons is that we're all getting more productive, more efficient. That makes companies more profitable. That increases wages. But that's not what we're seeing here and now. We're seeing wages go up because of labor shortages and the fact that companies are competing with each other for headcount. So productivity and the missing element of productivity makes a very strong labor market very hollow.
So Nela, it's Julie here. It's good to see you. Why is this still happening then? Why aren't we getting, what's the missing piece here?
You know, I have that same question. I really do, because at the same time that we're seeing productivity decline, and this is not just a pandemic story, this has been happening for the past decade, we're also seeing the advent of all this technology. You have AI, you have chat boxes, you have all kinds of labor-saving, labor-enhancing technology. The question is, how do you get mass adoption of that technology in a way that makes workers more efficient? The second issue is the fact that some of this labor shortage is really a skills shortage. So it's about training up the workers in order to really leverage the technology in the right way.
Neil, we have some economists talk to us recently about a job market slowdown going into next year. How significant do you think that would be?
It's going to be hard to tell. And I know that's not the answer that maybe you wanted, but we're at, 50-year lows in terms of the unemployment rate. We're still seeing really robust hiring in customer-facing industries like leisure and hospitality, restaurants and bars, healthcare. And so right now, the labor market doesn't look like it's on the verge of a recession. In fact, it looks like a market that still needs people to come off the sidelines. Remember, labor force participation rate is still more than a percentage point down from where it was in 2019. We're still in need of workers, and it looks like companies are still set to hire in 2023.
So what type of fluctuation might we see in wages? I mean, even in the latest ADP private payrolls report, we saw that move higher by a little over 7%.
Right, 7.6%. Yeah, what we're seeing is that we've seen a tremendous amount of wage growth. We're not seeing a huge acceleration, but wages are really topping out. They're staying at an elevated level, but that growth isn't decelerating. You saw that in the November jobs report put out by the BLS as well, 5.1% year over year average hourly earnings growth. So in both of these indicators, you're seeing wages go up and stay at higher levels instead of coming back down.
Nela, what's going to happen to purchasing power going into 2023, right? Even with those wage gains, purchasing power has not been fantastic because inflation's been rising at a faster rate. So how does that dynamic look next year?
That's the rub of the productivity that we just talked about. So we've seen all this wage growth, but it's not keeping pace with an inflation. And for the typical U.S. worker, what it means is that your wages are not keeping up with price increases. So the important part of the Fed's next steps continues to be getting inflation down so that workers can actually feel the benefit of wage growth. Right now, they're not.
One thing that we did see as well within kind of this hybrid work environment was for people who were able to see a better wage, looking for as well better living conditions, a better area as well. Do you believe that that's still going to be the case in order to offset some of the stickiness of inflation and some of the necessities that people are paying for, whether that be on the housing front or just other basics? Do you believe that we're still going to see people moving at the same rate or migrating just to make sure that their dollar stretches further?
You know, it's funny because there's so many more options in the labor market now. It used to be that you would have to pick up and move for a better paying job or a better opportunity. That's not necessarily the case anymore. While remote work is a bit on the decline from the peak of the pandemic, we're still seeing jobs that are being offered to be done in various locations. And so workers have more options now. Even a hybrid schedule can change where people live because it means you don't have to pay those commuting costs every single day. So that is something that actually is an advantage to workers going into next year, the widespread adoption of remote and hybrid work that wasn't part of any previous recession or downturn that we've been able to experience.
Nela, it's always great to see you and catch up with you. Nela Richardson of ADP. Thanks so much.
Thanks for having me.